What up, Trading Momentum family? How's it been? It's been a minute. I haven't done a YouTube video in a while, so go ahead and do this one and jump on it by Corporate Hustler's request. He was asking what is a straddle, and how do I straddle, and why do I straddle? So typically, the reason why I straddle most of the time is because if you don't like to have fluctuations in your account balance to where you can spend your day, like whether you're working or whether you have other things to do during the day, you can basically straddle your positions and not really have to worry about anything. The only risk that we really had in straddling positions was kind of towards the end of last year when things weren't moving, and really all you were really facing was theta decay. But that's not really so much the case anymore. The market's moving. I think we're going to continue to have more volatility in the market for the rest of the year and going into next year. So let me just explain to you a straddle strangle, something that I'm looking at possibly for tomorrow after the news. Tesla had a big run today. I think Tesla has some more gas to maybe get to 200. The one thing I'm really watching on Tesla, though, is that it has earnings coming up towards the end of March. So I think Tesla, even if it does run up and hit a certain number, that it will continue to trend in a certain direction, might have a minor pullback. Don't look at this gap down here and try to say, oh, yeah, Tesla has a gap. It's going to go fill this gap. Don't look at that shit, because the thing about it is Tesla still has a gap up here at 262. And that was way back in September. And we still haven't closed it. So I wouldn't try to time it by the gap. So I just kind of trade the trend and the way it's looking. As you can see, the momentum lines are starting to cross. So Tesla literally on daily is about to have a golden cross. The RSI is looking like it might top out soon. So that's another thing to watch out for. The weekly chart is already above a strong support, and the strong resistance for the week is about 205, 205. With it going into earnings, I expect it to do a little bit of action, a little bit of a run up, because earlier this year, if you remember, Tesla Tesla earlier this year had a run up in earn. Oh yeah, here we go. Here's a run up to Tesla in earnings, and then the gap up in earnings this year. So Tesla is definitely going to start making moves. We don't know if it's going to go down or up, but it doesn't really matter. The reason why it doesn't matter is because if you have it straddled, you're in a very good position. And you say, "Oh, wait a minute, Laurent, but look at this. It says that you don't make money until you hit 250, till Tesla has to hit 215, or you don't make any money till Tesla hits 181." That is wrong. This is what the graph looks like at expiration. This is what the graph is at during the actual day. So when you straddle Tesla at 197.50 and 197.50 and 200, if you come over here to the graph and you take a look at it, so if this is what you want to look at to see where your intraday moves are. So if Tesla goes up and hits maybe 214 dollars by tomorrow, you make 438 dollars. Now you can keep track of the decay of each leg throughout the time, and you can see that 214 will be $438 tomorrow. But if you hold out until expiration, you'll literally expire negative $101. But that's only negative $101, considering that you put up $2,000 for the trade, so you didn't really make too much of a loss. It's just more of you didn't make any money. So, and also, if Tesla were to drop from 200 tomorrow, where would you actually start to see really good money? You'll start to see good money at Tesla, maybe getting under 190, which is about 107, like to 186, like you'll get $172 return. So if you kind of go over to option strat and you put in the straddle, you can kind of see where how much money you make for each price at the given day, given the theta decay. So another thing that I like to do on the straddle is I like to get the March 6th $200 calls and get the week earlier puts expiration. Why? Because the calls are going to be a little bit more, or $963 on the call side, and the puts are $750. So the price is much closer to 200 than it is to $197. If all of a sudden the price starts to reverse, this $750 will actually start to gain in price and kind of balance out the price of the $200 calls. So being able to take advantage of the price movement, it kind of keeps your portfolio balanced as Tesla starts to make a move. And so that's why it's really a good position to have. Also, it's really good because you know what, this expiration is until next week. So let's say Tesla drops down and you make some money and Tesla hits 180 for some reason, you could actually close out your the put side and maybe add a little bit to the call side, or add a little bit closer to the in the money call side, and you already have a call position here, and you can actually ride Tesla up to the beginning. So I like straddles for a couple of reasons. I like straddles second to spreads because it gives you a little bit of options to choose on how to play it. It also keeps your portfolio flat when it comes to making trades and making money. Yeah, you don't make as much money going directional, but you know what? Who gives a damn? If you keep on playing these consistently, you will grow your yield curve in your account will be very smooth. It won't look like the market going up and down. You just have a straight, smooth going up yield curve. Putting on straddles and taking them off. The other thing about straddles is you can swing them as long as you want without really having to worry about what's going to happen the next day, or not really having to worry about the news. Straddles always seem to work themselves out. So, and then if you come out to strat, you can actually take a look at the days and kind of see where the price action is. I mean, for if see, and you got to remember, Tesla is a $200 stock. So a 10% move on $200, a 10% move on $200 is $20. Right, so that's a big move. Tesla's at $200. Tesla can easily end up in a 10% move in 2 days easily. It did 6-7% today, right? So if it did another 20% move, and you're on a straddle, you already did $693 just on that one play. On a straddle, you on a trade, you had none to worry about. If it even goes from 200 down to 180 dollars, you still make $307 on the move. These are just plays that you have no worries about making straddles on. So I hope I explained this to you all pretty well. I'm gonna go ahead and upload it to the new Momentum Trading page, Momentum YouTube. I'm gonna get that started again. I'm sorry about it's been kind of quiet lately these days, but I'm gonna go ahead and get it back up and running. So this is the video I got for you on straddles. Definitely take a look at it and shoot me any questions you may have later.